really so thrilled to be right now sharing this amazing, glorious, super and exciting moment of my life with all of you guys. And let me tell you that we are really changing the world as we know it. The world is not anymore the way it used to be. No, no, no. Who said that this was going to be a con artist game, that this was going to be a scammer game. Hey, you gonna lose all your money? I'm telling him behind it, this is real. No. That's a scam.
We are coming and we are coming in waves. We are starting and we are going to actually go all over the world. My God, still doesn't believe in me. What am I gonna do?
Alright, hey, welcome back. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor, obviously. Do not invest anything or leverage up or go on centralized exchanges. If you're in crypto, it's pretty wild out there. If you guys haven't noticed, I'm sure if you follow me on Twitter or you're in my chats, you know what's going on. It's madness. Just absolute madness. I'm going to talk about FTX first. Then I'll talk about... Can I even say it? I don't know. And then we'll talk about the stock market. So, yeah, like... The first Lehman moment was UK gilts, their bond market. The second shoe to drop, or the next domino, is FTX. Listen, I'm sure a lot of you guys know what's going on. It's actually very similar to BitConnect. BitConnect had a black box trading something, and really they had nothing. They were just... rehyphecating. So FTX has been rehyphecating. Listen, guys, I can speak 4 languages. Like, funds. Basically, people were trading on one of their brokerage or exchanges, whatever you want to call it. You give up your keys, right? And then you really don't own your own crypto. It's in the fine print. And people would trade on there. And then there was other financial vehicles where you could get yield if you lend it to them. And they took those funds. And then they gambled with it. Leveraged it up. CZ, Funds Seifu guy, from Binance, he had a big stake with them. He saw that something wasn't adding up. I mean, it was pretty obvious. I didn't even follow Sam Bankman-Fried, but if you did, it was pretty obvious. The guy was literally shaking in the past few months on interviews. Your body does signal away that something's wrong, especially when you've lost billions and billions and billions and billions worth of people's wealth, right? And some people's wealth who are, let's just say they're really high up in the pyramid, right? So he's probably scared. And so CZ was like, all right, well, I'm pulling out my stake, and that's all it took. Now, did he do it on purpose, or did he think that it was going to go under because they were a competition? I don't know. It doesn't matter. It would have happened either way. It just happened. He was the trigger point, right? It was like in that movie Margin Call. The music was about to stop, so he went first, CZ, and then the crypto dominoes. Actually, what originally put FTX in the hole is, what was it, Celsius and Solana going down? That's probably where it really started. And then they try to trade and make their money back or fill their negative balance of depositors' funds by trading, and then they lost even more. And I'm sure you guys have seen the genius behind the trading, the Harry Potter girl. She's a looker, man, real looker. And they're all hyped up on drugs and doing degeneracy, of course, and just a bunch of, you know. I don't understand why people just because someone has goofy hair and they're nerdy, and let's say they are programming geniuses or whatever, that doesn't mean they have roundabout what is it? From emotional intelligence to just common sense, right? He was young too. He was under 30. He was in his late 20s, I believe 28. He became successful very quickly. It started with him doing arbitrage between exchanges in separate countries, and he scaled that up, but then he's also tied into all sorts of people at the very tippy top of society, which I find strange. Now, I don't want to go down the rabbit hole. I just, but he had some pretty big backers, and obviously he was promoting just destruction of crypto, turning it into legacy, basically, where you could only have your crypto on exchanges, and that defeats the purpose of the entire innovation of crypto. So he would have destroyed it, and it just... Actually, he wouldn't have destroyed it. He would have destroyed the price and everything. But it would still live... Crypto would still live on globally in black markets. That would probably just keep growing on their own and eventually come back with time, a lot more time. But yeah, I mean, and he was funding his favorite... Listen, I don't want to go down the black hole, but, Kramer, he really loved the guy. That's all I gotta say. And you guys should follow Inverse Kramer on Twitter. It's hilarious. Yeah. So, this will go down as, what's his name? Kevin O'Leary, Mr. Wonderful. Hilarious, right? He's begging, after he lost all his money with him, he's begging for regulations. They already existed, and they were getting, he was getting visited by them months prior. And like I said, I don't want to go down the rabbit hole because it takes so many twists and turns. It's insane. Now, a lot of people are thinking this was all planned, and I don't know. Maybe not. I don't know, because I don't want to give him that much credit. You know what I've noticed? I've noticed there's a pattern with the people on top of the pyramid, right? Like, they love centralization and control and micromanaging, right? Why is that? Because it keeps them in their, in their position, keeps competition out, and for the real corrupt, they could rig it to their advantage, right? But the problem with it all is it just doesn't work, and there's and it always blows up. This is just like Bernie Madoff, and it's yeah, it is what it is. But what's more important, you guys could go look up. There's so many people who talk about this, but here's what people aren't talking about too much, which is more important. It's how is it going to affect crypto and us and everything, right? So what was on their balance sheet? Now, listen, guys, market cap, again, it's a fake vanity measure, right? If I have 10 rocks, they're worth nothing, but I sell one rock for $1 billion. The market cap of my rocks is $10 billion. Okay, that doesn't mean that there's 9 more billion there in existence. It's just a measurement of the value that doesn't really, it's not really there. You can't cash it out, right? But that said, I mean, when people in a lot of crypto companies and Silicon Valley companies, a lot, I've heard there's all sorts of, there's even like a pension fund, a school pension fund that invested with them. It's wild. It's not too systemic to the legacy markets. I don't think it's going to affect it. They're just going to write it off. I mean, I don't think they put a lot into this. Not enough where it affects them. It does probably sting or hurt, and it's going to hurt a lot more as the economy wanes. But for the legacy side of investors into FTX, right? But it's really going to hurt all of the crypto companies, the mining companies, the other exchanges. There's collateral damage here. It's systemic. Everyone was investing with one another, right? And collateralizing each other, and it's kind of like becomes a derivative, right? And it's no different from the stock market. And the problem is here's what's funny, right? SBF was buying a bunch of cryptos that were going under in exchanges. He was buying them. He didn't want to buy them. He had to, because if they completely went down, he would have gone down too. And then, in a way, he kind of levered up and put on his own balance sheet just a bunch of worthless garbage. But on the balance sheet, it's worth billions. But in the real world, in real life, no one's going to buy it off of him, and it's worth nothing. And it just all blew up. Now, the funds have been moving around. I'm not exactly sure what's going on, but is there a hack? If there is, it's an insider. That's for sure. But you never know. Well, I'm sure we'll find out, and the story will keep unfolding, and it's gonna get crazier. I've seen pictures of pool parties. It's gross. It's like band camp, with billions of dollars. So liabilities were about $9 billion. Liquid assets were $900 million, about $1 billion. A lot of it, 20% was, or $472 million, about half almost, was Robinhood stocks, stable coins. That was their liquid assets. Their liabilities are pretty much all gone. And a lot of weird coins I've never heard about. Now, what's funny is, are people going to get their money back? I don't know. Because FTX would send the funds to Alameda, which was a separate company, but it was his girlfriend, probably in the same ex-girlfriend, in the same room with him, was just a thumb drive, right? Or a hard wallet. And what I'm afraid of is the crypto market being tainted. For some reason, the funds were moving around through a lot of layer 1 blockchains like Ethereum into like the other ones. Actually, I don't know if they moved any funds through Binance. They probably will. But that kind of taints it all. And that's weird. Why would they do that? They can't actually take all the crypto out because it's just too much. Even if they start breaking it up, people are going to be following it forever. They can't get away. They can't do any, anonymity stuff or anything. It's just, no one's using it anymore. So how are they going to get out of how are they going to get that money out? The billions stolen, or I don't know. They could just market dump it and then short it from another account, not related, absolutely, right? That's the only way I could see them doing it. Whoever has all those funds moving around, it's like billions and billions of dollars worth of ETH. So what I don't like about it is is that like a setup for regs, right? Because it went through all of these layer 1s. I don't know. I hope not. Listen, guys, in the long run, none of this shit's gonna matter because how can I explain this? Clown World and all of this is only gonna accelerate, and at the end of the day, everything is based off of human perception, and it's socially reinforced. Meaning, if people just don't go along with anything, then it doesn't really matter or exist. For example, if everyone's driving down the road and the speed limit is 35, but everyone's going 50, no one gets pulled over. That applies to everything. So if they try to come after crypto, but how can I explain this? On a global scale, no one's gonna, go along with anything, and it's not gonna be able to hinder the crypto ecosystem. But they might try and do some more stupid shit like centralization, and this is all for CBDCs, right? Which, in my eyes, those are just like welfare coupons. That's really what they are. And again, like I said, if everyone's like, well, why would I use those if your last currency failed or your last currency was also digital? Most currencies in the world, the ones that matter, like the dollar, euro, this and that, they're digital. Like, so why just make another digital one? Oh, so you can manage us better? Like, none of this shit's gonna work, guys. Not in the long run. The more freedom that's taken away, the weaker the economy becomes, the weaker the entire system becomes, and weaker becomes the control structure. And that's why I always say the snake eats itself. And this has happened time after time in human history, and nothing ever really changes. It might, and it doesn't repeat exactly, but it rhymes. Except this time we just have more technology, which makes it more complex and more fragile, in my opinion. Right? All right. Yeah, so I just want to show you guys that visual. Let's talk about... I'll talk about the news in a little bit. I haven't even looked over any of it. We'll go through it together. There might be moments where I'm quiet for 5 seconds. Just bear with me. The video didn't stop. I know what it's like. I listen to a lot of YouTube. Let's take a look at this. This is a weekly chart. So, we're in the bear market. It's been a bear market for a year. I've seen quite a few bear markets now in my life. And this one it's bigger than the last. But that's because there's just more people involved and more money, right? So bigger the scammers as well. And bigger as you can see, if you go down those rabbit holes, there's a lot of people involved. So the max FUD is here, right? You guys could go to Hodl Dog, I believe is in Switzerland, and watch that video, because apparently there was new guidelines passed, but as I read it, and of course it's written like a robot wrote it, and it's broad as shit, so no one understands it, and it's really up, and that's done on purpose. But I guess nobody could talk about anything anymore, like talking about specific cryptos or specific stocks. Can I talk about my cars and watch it? Like, here's the deal. If you, for one, that I have freedom of speech, right? So it violates that. And in the grand scheme of things, if people can't share information, right, and they can't talk about the stuff they buy and what they like, this and that, when it comes to equities and cryptos, then the market doesn't recover. And unfortunately in the West, tax receipts aren't from industrial production. It's from financials, because the economy's been financialized. So if that comes up short, right, then, like, if they're not raising enough from cap gains, then they have to print it, and then the bond market starts dumping, and then they have to print, and then the Fed has to do more QE to bail that out, and then they sacrifice the currency, and then it's a whole world of pain, and it does inflate away the debt, but I don't it's just capital goes where it's treated best, and that's very people need to talk more about that. I don't think it's gonna last. It's hindering innovation, freedom, and everyone's already becoming poor, but that's just putting icing on the cake, and it eventually it's going to affect absolutely everyone, even the regulators. So I can't really talk about this, I guess, anymore. I mean, I can, but I'm just going to let the dust settle. Let's see what happens. There's still more pain to come for overall for the entire broader market, for the cryptos especially. And just hang in there, right? If you believe in it, dollar cost average. The best investment is keeping your job during these hard times. And if you have extra pocket change, because the current events happening are very, very bearish. There's a lot of fear, uncertainty, and doubt, and it's not over, and there's more to come. I personally do not think the Fed's pivoting anytime soon, like in the coming months. They really do have to stop inflation. If they don't, then it's over. So, and I'll talk more about that later in the video. So, looking at this, I don't know. Like I said, I can't really talk about it. It's unfortunate. In the long run, I think it's going to be absolutely fine. I have not seen anything of nothing out of the norm or illegal. So, but you guys can see the chart. I put up a what is this? The fixed ranged volume, and maybe a little more downside with the current environment and the macro. I do believe Ethereum and Bitcoin can drop another 50%, especially with that visual I was showing you guys earlier about the systemic risk from FTX, the fallout. There's going to be more dominoes to fall. And people have been screaming on Twitter to get your crypto off of exchanges. First of all, none of you guys should, if you follow me, I never said to keep it on exchange. If it's not your keys, it's not your coins. This is just basic OPSEC. Everyone's known. This happens every bear market, by the way. And I've been rugged. My biggest rug was an exchange. It just rugged me. Took 90, 70%, most of everything I had. And it just happened like that in a day. I went to log on. As soon as I found out, I couldn't even log in. And it was gone. It's just gone. There's nothing you could do about it. And that's why you have to learn about self-custody. Get a hardware wallet. Never copy-paste seed words. Never take pictures of it with a digital device. Matter of fact, you should have a separate laptop devoted to just crypto, and then have a hardware wallet, generate keys, and keep it up to date. Maybe give it a week or two to see if there's exploits or not, and then update it, keep it update, the hardware wallet, the firmware, and have it written down, and then take a diamond etcher and put the keys and write them into a block of steel or something. You could do it with washers as well. You could do all kinds of OPSEC. So, and do it from the beginning, right? If you were to stake in a wallet, you would want to have your keys secured prior to staking in that wallet, because you can't go back. So you want to do your security right from the beginning, because then later you have to migrate and do all kinds of stuff. Anyways, Bitcoin is on my blue line, and that's on a weekly chart. So if the price starts breaking down even just a couple $100, that's it. It should there's some support around between 12,000 and 8,000. Luckily, FTX didn't have any Bitcoin, because nobody wants it anymore. Even if Bitcoin went up to 100,000, right? From the current price, that's not even a 10x. It's 7, not even. It's 6x or something. So, yeah, they didn't have any Bitcoin. So that's good for Bitcoin. Although Mt. Gox is someday going to just release, and, the governments have a lot of it that they could just dump at any given time. Maybe they never will, but the Mt. Gox will come out after 10 years. I can't believe that they haven't released them. But when they release those coins, those people are going to dump instantly. They've been waiting a decade. So that's the next. I'm looking at 8,900, 8,900. Next solid support area, somewhere in there, anywhere from 12,000 to 8,900, and that's about for for Bitcoin. It's between like a 30 to 47% drop, something like that. Another 50, like wicking down, another 50% from the current price, 16,900, very possible. I do believe Ethereum will also dump with Bitcoin, but probably it's been holding up better ever since the, migrating from proof of work to proof of stake. And there's a burn function as well, so Ethereum is more deflationary than Bitcoin now. So I think it'll dump with it, but it's just going to hold up better. And I do believe Ethereum will flip Bitcoin in the next bull cycle. When will that be? Well, we'll talk about it. Support for Ethereum. Well, my blue line's at about $1,000. Right now it's at 1,222. Can it wick down? Next support around... The next major support is around like $450. $450. You can do that if there's more exchanges going down and the Fed keeps raising rates. We're going into a depression, so it's very possible. I do not think it's over yet. That said, though, my blue line is a very good indicator for a bottom. But I don't have any faith in it. There isn't, like if you were to backtest it, there's just not enough history. Because relatively speaking, Bitcoin is a new asset still. Although I think it's already played out its S-curve, as you can see here on log. Unlog that. It looks like the Wall Street cheat sheet. And I feel like the Bitcoiners haven't felt pure. They haven't felt despair and depression yet. They're just angry, right? So at least 11,000, at least down there, at least wick down there, if anything. That said, my blue line, it is on my blue line. It might give it a bounce, but for what reason, right now I don't see any bullish, I don't see anything bullish coming up for the entire global economy and broader economy. Besides maybe the war ending in Europe, that would be a bullish catalyst. But besides that, by the way, I don't see that ending. So I do not think the holiday season's going to be that great. And earnings I expect to only get you for equities, and equities are also, they do affect crypto because more money has to come into it, right? But if people are losing their jobs, then inflation's not going down. People have less extra cash to invest. It is what it is, guys. So, finishing up with crypto, looking at the oscillators, RSI is overbought, and the other ones, none of them look bullish to me. Not even MACD or anything. So, Death Cross just happened as well. Kinda was in line with FTX FUD. TA always somehow lines up like that. So, and the rest of the altcoins are just annihilated. here's a heat map of the stock market. Let's start with my overview here. The market had a nice rebound. Will it follow through and revisit all-time highs? I do not believe so. And that's the underlying macro fundamentals of the economy is definitely slowing. And people are maxing out credit cards. And the housing market is a huge part of the GDP. And that is just beginning. The correction in housing because of higher interest rates, right? And, you know, everything's lagging the federal funds rate. So let's look at a few things I put in the prior group. The 5-year mortgage, I did the 5-year just because I believe that matters for new home buyers if they're looking. I'm not looking at the 30-year, but you know, the 5-year is going to really push up your interest payments on a mortgage, and most people probably don't qualify anymore. So it's at all-time highs. Well, in the recent years, I'm not exactly sure about, you know, past. So I don't know how anyone could get approved for a loan right now, especially with the cost of your auto loan going up. Everything. The cost of owning a home is only going up, right? Utilities, even your garbage, everything. The cost of everything. Living is going up. That's where the inflation's really hitting hard. And I believe it's because of energy prices. Total U.S. private housing starts. So I shorted home builders, and it's been working out pretty well. It's hitting rock bottom, like 2007 rock bottom. Maybe I'll do a walk video through some developments that I see. I think they might have just stopped like building the homes because no one's buying them, and they're like halfway through developing an entire neighborhood. And I've seen that play out in my lifetime, right? Unemployment rate data. So unemployment's starting to go back up. Just starting. Amazon just laid off tens of thousands. Facebook. The tech sector is going first because they were really overvalued more than anything. Thanks to, the stay-at-home stock phase of 2020. And home repair, like home improvement, those types of companies are probably going to do layoffs. Like everything to do with housing and the tech bubble, I believe, is going to get hit the hardest. So what did I write? Unemployment hit. You know, I'm just going to save these, what I wrote for the people in my chats. Industrial production index. So it's gone up, which is good if it was real. So this is another side effect of inflation. Your industrial output looks like it's going up, but really it's just more money sloshing around because the raw materials and the energy to produce things cost more. Maybe they hired more people, and maybe they have to pay their employees more. So it seems like industrial production is going up, but I don't think it is. I think it's constant, and it just costs more to do to produce things, which is this is real economy. This is real GDP, industrial production and manufacturing. Here's the Tendies Index and the Breakfast Index. So Chicken McNuggets are costing more than ever. It's not real food, guys. There's a lot. I have a shell link, right, for organic meat. You get it delivered to your house, like a box of meat, organic. And there's nothing more expensive than being unhealthy. That's my personal belief. And it will catch up to you. So you might as well eat less and pay more and just be thinner and healthier, in my opinion. Here's the Breakfast Index. It's composed of bacon, bread, coffee, orange juice, eggs, milk, and sugar. It's really up there. Look where it was at in 2009. Cost like about 12% more right now. And here's the thing with inflation, right? When they say get inflation back to 2%, that's their target. I doubt they'll make it. That doesn't mean that the price increases you've seen in the past year are going to go back down. It just means they're going to stay there. So if they got inflation back down to like more normal levels of 2%, everything you're paying for right now just stays at that level. So, for example, this is how I because I'm always buying energy drinks. I used to buy 3 energy drinks for $5. Now it's 2 for $5. So if they get the inflation back down to 2%, I'm still paying 2 for $5. Why is that? Because they're getting inflation back down to where it's the growth of inflation. That's what they're trying to stop. Not the inflation which has already happened. That's just going to stay with us probably forever. So the prices you see now are going to stay. If they're successful, then the prices are just going to stay where they're at. If they are unsuccessful, or if inflation keeps running this high, then things will just keep getting more expensive. And eventually, they will keep raising rates until the stock market crashes, everything crashes, massive unemployment. And then you're going to see sales, and I've said this so many times, you're going to see sales and things you don't need, but the prices of things that you do need, staples and agriculture and stuff like that, will probably just keep going up or maybe come down, but stay the same to current today prices. So if a carton of eggs is $4 right now, it might actually be the cheapest you'll ever see it. Depends on the timing of things. I believe inflation is going to go higher for a little bit longer, maybe into Q1, or stay around this range we're at right now. And then eventually the economy is going to get so bad because of them raising rates that the prices will come down a little bit for like eggs, for things you need. But for everything, and then like I've already said this, the other things you don't need, those will come down in price, and you already see that happening already. You can definitely see it on Amazon. And I've seen it at stores as well already, like the prices being slashed on like bicycles, TVs, all kinds of things. But the food is still high. Alright, I think you guys know that. So here's the CPI data, Consumer Price Index. It's making new record highs, 40-year record highs in inflation. And that's even with their numbers. Again, if you adjust it for how they used to measure it, and they don't have like deflators like homeowners equivalent rent, stuff like that. By the way, there is good things that'll come from all of this. Hopefully, rent's going to come down because a lot of homes are going to come onto the market, and desperate people will rent out their homes at cheaper prices to fill them, so they have some cash flow so they can pay their higher mortgages, and they're probably underwater. All of the Airbnbs are just, there was a huge Airbnb like bubble. Apparently there was a lot of people on like YouTube and everywhere like talking, they turned it into like timeshares kind of. That's what it sounded like, where they were teaching people how to get Airbnbs, and you always see these at the top. And then a bunch of people got into the Airbnb business, and now there's zero demand. As the average consumer stimmy checks are gone, and all that stimmy money is gone, people are traveling less, right? And I feel like a lot of these people just bought homes like all over the place to Airbnb them, like in just like neighborhoods, which is weird. And there's a lot of overhead costs that comes with that as well. So I think a lot of people got in over their heads. Here's the Fed funds rate. It's a little bit over 3%. Considering how much debt there is in the system, that's a lot. That's like kind of like 9% if you think about it. So if the debt has gone up 200% in the past 2 decades, a 3% in the Fed funds rate is like a 9. That's how I look at it. Here's daily treasury's liquidity. So on the maturity of short-term bonds, treasury bonds, no one's like the liquidity is low. Like there's no bid, and that is the ultimate canary in the coal mine. And Janet Yellen was talking about doing some sort of FTX type of a money magic to provide liquidity with the treasury for the bond market, kind of purchasing, I guess, bonds from the Fed, unloading their balance sheet, that is actually where the deflation really comes from. It's from the Fed unloading their balance sheet. And as they started QT a few months ago, it's definitely showing in the bond market now. Like, who wants to buy well, a lot of what they're unloading is home mortgages, this and that, but the bonds as well, it's showing up in the bond market, because the bond market's always smarter than equities. They see things much quicker. So who would buy front end, like short-term bonds versus long-term? Technically, the yield is higher, right, on the short term than the long-term bonds, but the upside in the long-term bonds is much higher if the Fed pivots and lowers interest rates, and that's what the bond market is betting on. So they go far out buying 10-year and above bonds, and they don't buy short-term, hoping to get gains on the bonds themselves, the value of the bonds going up when the Fed pivots. And if they don't pivot, then they still get decent yield. Although it's a horrible deal because inflation's running higher than all the bonds, but especially the long term. And let me show you, and that's what the yield curve is. Here's the yield curve. See how short-term bonds are, the yield on them is much higher, right? But that's because no one's buying them. The yield is lower on the long-term 30-year maturity. That's because everyone's buying them, because there's demand. And this is this is literally an inverted yield curve. Now, I believe the stock market, Wall Street, they think like, oh, well, we still have like 6, 8, 9, 12 months, 18 months before everything, we go into full-blown depression and blah, blah, blah. And equities start tanking. Because that's what historically has kind of happened. But I feel like it's shorter every time, every cycle. And that's because the leverage and the debt and everything is just more. So I believe this time it could be like. By the way, we've seen the inversion quite a few times this year earlier as well. So, but overall this is rising up and it's inverting now, and that's what you see back here before this crash, right? This was the .com crash. It went all the way up to here, right? The yields went high and it inverted. Here's the mortgage-backed security crisis, 2007 and 8. There, see, it inverted. So both ends are higher than the short term and middle. It did not invert as much as currently, but it inverted. See? It also did it right in 2019 before wicked cold season. Not as much. Well, rates weren't raised by the central bank yet. Here we go. See, it was kind of inverting. But they were lower. So every time the central bankers raise rates, this happens. The yield curve inverts and then the economy goes into recession. It's manufactured to stop inflation. Wow, look at that. It was it's bad, guys. It's really bad. All right. VIX is on my blue line. Volatility. I'm very disappointed in the volatility all year. Should have done way, way better. But, it's been an orderly sell-off managed. I'm sure there's some shenanigans going about, keeping this market totally dumping. A lot of it's word of mouth. So right before the elections, we had an inflation print of like 7.3. Inflation came down a little bit. Everyone got super excited. This is it. Peak inflation. They're going to pivot. No. They're probably going to revise that back up. So the stock market, this rally for the past 1, 2, 3, 4, 5, 6, 7 weeks has been pretty spectacular here. I think this looks like a bear market rally, and this was it. Hit resistance, back down we go. So I do think eventually my blue line will get revisited. Can the market, this is the Dow Jones, by the way. The Dow Jones is it is performing better than like the NASDAQ and the S&P. Here's the NASDAQ composite. It did not rebound as well. That's probably because of Facebook or Meta. And here, let's take a look at so here's the fangs pretty much. this is why the Nasdaq's performing not as, it's not holding up as good as the Dow. It should actually be, the Nasdaq should have fell way more. Because if you look at the heaviest weighted companies in it, not Tesla, but the, Meta, Amazon, Arc, Netflix, they're like wrecked. This looks bad. If you're holding these individual stocks, now if you're holding the indexes, you like what most retirement accounts look like, then you're looking at like what, a 25% drop in your account, 30. That's not too bad. Now, if you're holding the individual stocks, you are wrecked. ARC is down 77%. Meta is down 70%. Amazon is down 48%. At its low is 50. So Amazon is the one, it's the real bellwether, in my opinion. I mean, it's the largest retailer in the world. Or is it Alibaba? I don't know. But, well, Amazon is for the US. It's also in Europe as well, right? So, if people aren't like Amazon, everyone uses Amazon. Everyone. They even watch TV on it, right? Amazon Prime. If Amazon was warning earlier this week that we're going into a deep recession, they probably have the best data on the economy because they see their sales. If their sales are down, that means the consumer's struggling. They don't have money. It's that simple. They're laying off workers. So. Home Depot, not that bad if you look back historically. Now, if you look back historically, they're still all way overvalued here. Look at Tesla from 2020. This is nuts. Tesla is, and Tesla is important. I was just watching a Gammon video, and he was talking about Tesla goes down, it could have systemic risk, which sucks because I like Twitter, and I kind of like Elon because he's giving us some freedom, some hope here. Still up 700% from the COVID low. From when this bubble really things were overpriced in 2016, They really were. From 2016, Tesla is up 1,863%. It outperformed Bitcoin by a lot, I believe. So in the grand scheme of things, everything is still, there's a lot of people who are still sitting on a lot of money, guys. That's why another reason why inflation isn't going down. It's really only let's say top 10%. You could stretch it to maybe, let's keep it at 10 to 15%. The top 15%, the upper middle class and above, they're still massively up on a lot of their stocks. A lot of these boomers are way up. Just from 2016. And even back then, it was everything was overvalued. Let's take a look at Facebook. From 2016, oh, actually, it actually did revisit 2016. So Meta actually found some fair value. I'm not saying buy it. I'm not gonna buy it because I think it's dead, dude. It's like gone the way of MySpace. Apparently, they thought they were gonna hook everyone up to virtual reality, like Ready Player One or what's the other movie? You know, those virtual reality movies. Home Depot. I find this interesting. This is not log. This is log. Let's take it off log. So Home Depot is more of a real company. They sell real things that people really need. And people will always shop there. I just think that the housing market is going to take it down a bit more. It's still up. About 185% from 2016. So I do think where the bear market, so in 2012 was like 11 and 12 was the bottom of the mortgage-backed security crisis bear market for especially housing. That's when no one was buying homes. And that's when you could have bought a home, you know, fairly priced, even adjusted for inflation, right? So things aren't going to go all the way back there. Because technically there's more people, and then again, I mean, a lot of boomers are gonna downgrade or just have family members move in with them. I'd say it could revisit. I think a lot of stocks, when the economy really starts going into the deflationary depression part, are going to revisit the 2020 COVID dip bottom low, or near it, at least minimum. They should. All right, so where was I? Here's what I'm thinking. Few more rate hikes. I believe Powell is going to keep going. He has to. Until inflation, we really see inflation coming down. Like sub 5%. In order for that to happen, he has to keep raising rates. And even when he stops raising rates, he's probably going to hold them there for some time. Until a lot of things start breaking. Things are going to start breaking, and people in the stock market keeps thinking every time something breaks, he's going to pivot. And then the market rallies. And it's going to that's what's going to keep happening. That's why the market looks like this. Let's actually take it to the S&P 500. It's a better barometer. Let's take it to a daily chart. So this is why we see this, I believe. You know, we get a huge sell-off, then a huge dead cat bounce, bear flag, bearish pennant, boom, huge sell-off. Then we get a huge, a real sharp rebound. And another huge sell-off. I mean, this is textbook bear market, right? But why are these rebounds, why are they so sharp and so large? These moves, by the way, are bigger than any moves in the bear market, right? or not bear market, bull market. So if you zoom out, if you look at the bull market, see this? The bull market? It's like a series of small stairs heading up. And yes, everyone's like, boom, then the elevator shaft. We're not seeing that. There is no elevator shaft. It's kind of like we took small stairs up and then just took huge stairs down. And that's what's really annoying me. And I prefer the Band-Aid to be ripped off, but I have... So what? Why is this happening? Because it's frustrating. And this is why the VIX isn't like exploding. Because the market still thinks the pivot is coming every time things get really bad or the economic data is really bad. They just keep thinking the pivot's coming, the pivot's coming. And that what that is telling me is people, investors at least, still have money. And they still have those animal spirits and gambling addiction type of throff, or yeah. It's hard because from 2020 till the end of 2021, the beginning of 2022, I mean, people saw life-changing money. I mean, we did, all of us, a lot of us, right? And it's like it's still in them somehow. Another thing you could think about is maybe capital's fleeing from the rest of the world because things are worse in Europe and other places. So it's coming to U.S. equities, maybe. And maybe they're buying the dip, and they are also anticipating a Fed pivot. But the Fed's not pivoting, and they don't have to pivot as long as the market keeps acting like this. You know when the Fed's going to pivot? When we finally see some capitulation and a massive drop. Like, not quite down to the bottom of COVID low 2020, but at least get down on the S&P to like, if we see this will put the economy in a recession. You'll see massive layoffs, and it will stop inflation, and it will become deflationary, in my opinion. But as of right now, it's like, okay, so we're going to get another sell-off, and then, another rally. Things are really bad. They're going to pivot, rally, then, oh God, another sell-off. Oh, another pivot, or another, everyone's like, oh, they're not raising rates as much. They're going to pivot soon, more QE, and then, oh, all the way back down. And maybe that's the plan. Maybe that's what they want, an orderly sell-off. What's funny is, during this entire time on Main Street, in the real economy, the pain actually feels like this. It's just downhill for the average person who's not who's not like managing money, and for the retirees, it looks like this. For traders on Wall Street, it looks like this, right? So I do believe there at some point something will cause the cascading. It'll be like an FTX moment, except for the stock market, right, and the global economy. Maybe the war will really heat up, and we'll see mushroom clouds. I don't know, but something maybe. So if massive war breaks out, right, or Taiwan, something, that would be very bearish in the short term, and it would cause this. In the long term, it would probably be very bullish for the Dow, commodities, energy, staples, stuff like that, which I will be buying. But for the tech sector and I've also looked for the private groups. I've looked into defense. and I've looked into there's you know what I really like having something in my portfolio of investments that's very core. It's like a spine that is not risky but produces cash flow. So there is ways to get farmland. And you could be looking at 12 to 15%. It also depends on the value of the land or what they're growing. So what they're yielding, like what kind of crop, or even staple like animals. So if the value of like steaks go up and meat, and you have like, and you have partial equity in a ranch, and you know, when you signed the contract, when you invested, like, let's say 20 grand, let's say the minimum was like 20 grand, and you're looking at yielding right off the bat 15% year over year, but the value of the meat goes up, you could be yielding more, right? Like 20%. So if you put in 20 grand year over year, you're making 4 grand. And let's say the contract's for 10 years. And then you get your principal back, and then you get to keep the yield, right? The payout year over year, like the 4 grand. Which is nice little cushion for the next like 10 years. Like every year you get, 4 grand if you put down like 20. That's not too bad. Of course there's taxes, this and that, but even like 3,500. That would it just helps. Something you could count on. I'm all about passive income, guys. And that's the only way you're going to beat inflation. Or keep up with it. Not even beat it. Just keep up with it. You only have 24 hours in the day. You can't work 3 jobs forever. Like, eventually something's going to break. Like your health, or you just can't. It's not sustainable. I tried it in my 20s and I did it forever, and eventually you just suck at like all your jobs and you just start getting laid off. And no job is secure, in my opinion, unless it's very necessary during a depression and it's very dangerous, or you work in the energy sector, like in like oil or something. Here's the broader indices. Yeah, I think they're all gonna roll over in the coming weeks and months. I believe by Q1 2023, things are gonna be looking real bad. And by Q2, earnings for Q4, the holiday season, right, will be coming out, and if they're weaker than ever before, then it'll be like confirmation. But by then, I believe equities will be much lower, and possibly things will be breaking, especially if Powell keeps raising rates. Now, if Powell keeps raising rates, I believe the rest of the world kind of has to follow. If they don't, their currencies start going into free fall, and then the UK gilt situation starts happening all over the place, which might be the plan. I mean, it's good for the US. So, because some of them just can't keep up, and they can't raise rates because their economies are weaker than the US, just from the sheer size comparison. Here's the global Vanguard index, 3-day chart. We have a death cross coming up. Past 3 days, the market's sold off a little bit globally. So, here's energy. Some of the energy ETFs and stocks have been going up and performing really well. And I'm kind of like missing out on it. I mean, I caught half the rally like a year ago, so it doesn't even count. But I'm waiting. I could have bought this dip, but I didn't. I believe when we start going into global financial depression or whatever they're going to call it, like the mortgage-backed security crisis 2007, when we go into that, energy will come down short term because demand destruction is going to happen. And I believe that will be the big dip buying opportunity because they will eventually. Here's how they're going to do this. So if I put myself in their shoes, they're not going to pivot and then just all of a sudden do like COVID stimulus. That's what I feel like that's what everyone thinks they're going to end up doing. They will if there's like massive, like if everything's blowing up, like the repo market, banks, everything, and like World War III breaks out, right? They'll do it then. But I don't think it's going to happen like all of a sudden. I think everything is like slowly unfolding now. So what they're going to probably do is they're going to provide, by the way, Treasury does have like $1 trillion they could deploy for emergencies. So they're just going to keep everything duct taped together and papered over as Powell keeps raising rates. And they want an orderly, soft landing, right? And then as the depression really kicks in and it's very deflationary, it starts becoming deflationary for some things, not all things. Deflationary for homes, asset prices, and things you don't need, right? Energy, like oil, might come down. Especially if things don't like really escalate in Europe, right? And let's say that just kind of happens and then someone wins and it's over, right? Then I believe oil is going to come back down and you'll have a big buying opportunity maybe summer or spring of 2023. And then I'll start looking at energy again as a huge dip buying opportunity. And also, mining stocks, commodities, metals. But it could happen sooner. It might happen in mid-winter. Timing all of this is the hard part. Knowing what's going to happen, it's not that hard because fundamentals and macro isn't hard. So, yeah, let's look at the news. All right, the news. Apple will source US-made chips from Arizona. Well, that's good. I do see a lot of chip making in the US starting up now. Is there investment opportunities? Probably. It's going to take a look at a lot of research. You made an 8 billion mistake. I believe it's more. There is light at the end of the inflation tunnel, but we're not there yet. That is true. I agree. Nvidia's shares pump and dump after earnings miss. Well, that's probably due to less crypto mining. The age of easy money is over. That's... We'll see. We will see. It might be over for a couple years. But it'll probably ramp up again. Kind of like after the mortgage-backed security crisis, right? They did a bunch of QE. It's not like... it was nothing like what we saw in 2020. But I do believe the public is going to feel recession, depression they've never felt before in their lives. And they will be doing forms of UBI and stuff. They will get money out to the masses, because if they don't, then everyone's going to get very, very angry very, very fast. I'm surprised people aren't yet, but I guess they don't feel it that bad. Not the middle class and up, but I did a survey in my chats. So far, it's like 50-50. Some people feel it. They're starting to feel the pinch, but the other half, not so much. Not yet. I see it. You know, I cut back, though, personally, like buying things. First, that's what you do, right? You cut back, and then you start thinking of ways to save money. You should be thinking of ways to have passive income and multiple revenue streams, cash flow, like I was talking about earlier. That'll pad it. Like, you're not gonna feel it. You're not gonna be getting rich, but you're not gonna feel it as much. Like, your standard of living doesn't really have to go down by much. There's little things I do. I put like a can of Seafoam in my gas tank. Every time I tank up, it helps. It like, I believe it really does give me 20% to 15% more fuel mileage. The I don't know. Listen, like, this guy used to be like an actor or a drama class teacher or something. Like, they're not serious people. Not like in the past. And I believe a lot of everything is really just security theater at this point. Like I said, extremely complex control systems need extremely intelligent, motivated, and free societies to manage the complexity and keep it running. You're going to be seeing blackouts and shit, like, when things get really bad. Housing affordability worsens as home ownership out of reach for anyone making under $100,000 a year. I don't know what percentage of the population make that much. I'm sure it's listen, 100,000 does not go nearly as far as it used to just 15 years ago. Like, 15 years ago, 100,000, you're living in like a McMansion. 100,000 today, a year, you're basically middle class. Not upper, just middle class, I believe. Maybe a little bit higher, but it's not like you're living large, right? You'll have a new car, 2 new cars, nice furniture, probably a nice home, but nothing too crazy. But what I'm trying to say is the new generation, millennials and under, like, yeah, some of them were making 100K, but those were just in Silicon Valley and like tech jobs, stuff like that. And then they usually live in areas where like the average price of a home is like 800,000, and you have a tiny yard with like, you know, it's like 2,000, not even 2,000. It's like a 15 square foot like studio apartment or small home. And in those regions, and the layoffs are coming, right? So 867 U.S. military bases worldwide. That's a lot. You know, everyone looks at like, oh, the U.S. spends so much more. They're so much bigger than every other army combined. A lot of it's just maintenance, guys. Just keeping like all these bases, keeping the lights on. What else? 3D printed meat is real. That's gross. I'm sure there's so much healthy stuff in there. SpaceX attempting to raise $150 billion valuation through funding. How's he gonna raise that? Where? Who? Like, what do you get for that, you know? That's a lot, $150 billion. That's with a B. Especially now. Oh, the billionaires, I believe, are fine. A lot of them cashed out at the top. They don't cash out everything because they can't, you know? Because there's no liquidity. There's no exit liquidity. But they, you know, they're fine. You'd have to find 150 billionaires. It's just easily possible. Which means you're beholden to all of them. Short covers unwind. This was November 16th, by the way. Oh, yeah. Today's Thursday. So, yeah, this was yesterday. If shorts are unwinding, it's probably a good time to add. Now, I don't short outright or anything, but inverse ETFs, and I'm not doing call options because I showed you guys the charts. It's like after every drop, there's a sharp rebound because the pivot's back. At some point, the boy will cry wolf and something big will happen, and the market's going to keep falling. But we don't know when that could be. That could be next week. That could be 3 months from now. So I just add long inverse ETFs and no call, no leverage. Seismic unrest in Hawaii. A lot of volcanic activity in the past few years. Have you guys noticed? Maybe the poles are flipping. Two-thirds of French want stricter. Okay. I bet they do. Are rent controls coming? I really hope not. Sounds nice if you're renting, but what ends up happening is there'll be a shortage of rent because who wants to be in that business if there's price controls? When there's price controls, someone eats the loss, and then they go out of business, or so then they'll just take it off the market. And then guess what they're going to do? They're going to sell their home. And they're going to sell it at a discount. And then home prices are going to keep falling. So actually, if you're looking to buy a home, and you're already renting and you're locked in on a contract, it's good for you. Because if they do rent controls, that means there's going to be cheap, homes are going to fall massively in price. And then you could upgrade later if you're doing better. German meat industry warn of empty supermarket shelves. Another 40% jump in meat prices. I'm telling you guys. Investing in farmland with livestock probably could be, not financial advice, I'll look into it. I put it out for the private group, what I'm looking at. So I want to look at this. U.S. container freight is shrinking. Container freight volumes at the largest U.S. ports were down 3.8% in September compared to the same month a year earlier, confirming slackening of merchandise trade and downturn in the business cycle. The Post of New York, New Jersey, Los Angeles, the ports of New York, New Jersey, Los Angeles, Long Beach, Savannah, Houston, Norfolk, Charleston, Seattle, Oakland account for overwhelming majority of container ocean freight into and out of the U.S. The total volume of loaded containers handled by these 9 ports amounted to 2.67 million 20-foot equivalent units in September 2022, down from 2.77 million in September 2021 and 2.85 million in September 2020. So, I mean, it's like at the same level it was in 2019. So it's still high. It's just not as high as the past 2 years. And in 2019, things are all right. So I believe freight has to shrink a lot more before it's like, you know, we're in a recession going into depression. If it gets back down to 2015 levels, which is like around 2.39, let's say if it gets to 2.4, then that's a sure sign. Because remember, you know, population growth, but it hasn't grown that much since 2015. Not really. It really actually hasn't. So if we just got back to 2015 levels, I still wouldn't be too worried. Now, if it falls to 2 million, then you know we're really in it. U.S. containerized rail freight. So we're like, that's interesting. We're around the 2013. Huh. U.S. containerized rail freight. Million containers originated each year in the month of... Reporting results in recent days, most port operators blame the drop on manufacturers and retailers cutting orders to reduce excess inventories as well as rotation from goods to services spending after the pandemic. The same slowdown was evident on railroads, where the number of containers originated fell to 1.09 million in September 2022 from 1.14 million in September 2021 and 1.22 million in September 2020. That's a decent drop in railroad. And they're like trying to strike as well. Parcel delivery services have experienced an even steeper drop. FedEx reported U.S. deliveries were down around 10%. That's a lot. 3 months from June to August compared with a year earlier. Freight is reflecting a significant slowdown consumer spending on merchandise over the last 12 to 15 months. As economies have reopened after the pandemic and spending has rotated to travel and other services. I remember in 2020, I shorted cruise liners, gyms, and all kinds of stuff in anticipation of COVID. Well, cruises will probably get hit. Travel and leisure will definitely get hit during a recession as well. But, I went with the home builders because it was such a bubble, and that home builders are reflecting that first, right? From the interest rate rise. U.S. ISM Manufacturing Index 1980 to 2022. Diffusion Index base equal 50 monthly and 12-month centroid average. So, if, these grays are recessions. Yeah, I mean, this is trending straight down. like it would prior to a recession. It did do it back in like 1996 or 7, but you know, the 90s were the good times. Things were way different back then. Because that was, the 90s was like right after Volcker raised interest rates massively to like 20% or something. So the economy was just like doing fine for a couple decades after. And there was no recession in sight or dot-com bubble, you know, that only affected people who were gambling in dot-com stocks. Very similar to like cryptos. Natural gas will have a comeback, especially with Europe this winter. I'm surprised prices aren't higher. That's what I believe. I could be wrong. I don't know why it's so down right now. I'm not exactly talking about companies, although I do have a list. It's a great podcast. Guy who was in the business for like 40 years. I got some tips from him. What else? This is interesting. U.S. single-family housing permits plunge to COVID crisis lows. Starts slump. So building permits are for like, you know, leasing new buildings and homes, or to build new ones as well. For starts. Housing starts, single and multifamily rental units. Blue line is single family, red line is multifamily starts. So single family is just falling off a cliff. And you want to know why? Because Blackstone and all these Wall Street hedge funds bought up all the single family homes, and now they're sitting on the bag. And they're not selling. And if they are, it's very slowly. It's at a trickle because they don't want to bring down the housing price. Says, by the way, if like in a neighborhood one house sells at a discount, then all the other homes all around it, prices get discounted or slashed. That's how housing works. It's on the margin. It's not really like other things. So if there's like 100 homes selling in your neighborhood and just one of them just drops the price like 40%, then all the homes all around it like immediately drop like something, like a decent amount, like 10% or just as much. And that's how it happens. So they're gonna be stuck holding the bag, and it's funny. And they deserve it because they bought up all the homes. They pushed up all the prices for everyone who can't afford them, or there's a bunch of suckers who bought at the top, and now everyone's screwed. Multifamily starts haven't fallen as much, but they're going to come down as well. We're probably going to see 2014-13 levels. I believe the housing bubble's that big again. It's probably, well, technically it's bigger. It is very regional though. That's the thing. It's regional, and it's different everywhere because of COVID. A lot of people moved out of cities into like very rural areas, and the prices really went up. And now a lot of them are probably regretting it, and they can't work from home anymore, or they don't like it, or now they can't afford it, or their mortgage is going up because it wasn't fixed. Or it depends on the state as well. Like Texas and Florida is just like everyone moved there, so it is regional, and you have to really take a lot of things into consideration. I would say even like the type of industry in the state, in the city that you're moving to or moving from, that has to be taken into account. Like if you're like in San Francisco, right, Silicon Valley, and that's a different market from like an oil rig city. So the prices of homes like where there's energy, like let's say in Texas, and there's less taxes, and it's an oil city. Like a lot of people work in the oil fields or whatever. I believe the homes there are probably not going to go down in value as much as like maybe in Silicon Valley where the tech startups are blown up. Not advice. That's my theory and thoughts. Finally, given the further plunge in homebuilder future sales expectation, it appears housing starts have a long way to fall before any balance is found. Yeah. U.S. new privately owned housing units started by structure is green. Red is National Association of Home Builders future sales. Yeah. What's this? Oh, here's another FTX thing. The Enron liquidator, the guy who did Enron, remember that? It was a good like Jim Carrey movie. I forgot what it's called. Someone could put that in the comments section. It was a good movie. Of like it was basically like based on like an Enron employee or exec. It was just a funny movie. It gives you a good idea of like the early 2000s and 90s was like. It was really like that. It was like keeping up with your neighbors, right? The green lawns, getting the big McMansion, and everyone's starting to invest, and it was just different. It was very similar actually to the last like year, although it was different. It's hard to explain. There was definitely more wealth back then, and the economy was definitely stronger. Today, it feels like a lot of people made money, but it's like it's not based off of real economic activity, you know? So Enron liquidator overseeing FTX bankruptcy speechless. I've never seen anything like this. You guys could read this. I'm not going to read a lot of it or look into it. Never in my career have I seen such a complete failure of corporate controls and such complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, this situation is unprecedented. That's hilarious. What else did he write here? That many of the employees of the FTX group, including some of its senior executives, were not aware of the shortfalls or potential commingling of digital assets. Didn't have appropriate corporate governance, no accurate lists of bank accounts. I feel like they didn't even like organize. What did I hear? What did I see on Twitter? Like they didn't even know like what they were where the money whose money was who that they were gambling. Like it's nuts. Yeah, you guys could read all that. I think we know what happened there. It's pretty simple. What else? Dude, these people in Europe, like, they will be the first ones to not make it if there isn't like enough energy and the lights go out because of the energy crisis in Europe. It's a call. Like that's a call, guys. Look at them. I was talking about Extinction Rebellion if you're just listening. What else? Woke capitalism is a scam. No shit. When is the green movement gonna go away? When enough people go bankrupt from that as well? There is a place for windmills and like solar, but not to the degree that they think, and EVs as well. I saw a video of an EV just take off, and the guy's like pedal didn't work to stop the vehicle. Like, that's terrifying. It just went like 200 miles per hour and you couldn't stop. Can you imagine just holding on and you keep going faster and faster and faster? Stocks and bonds sink as Fed's Bullard hammers pivot hopes. You could see them like, because I have a feed on my Twitter where every time they talk, like, it gets tweeted out, like the main points, and it's like they're like talking. So when they want the market to go up, they might not say much, or they might say, all right, it's inflation's cooling or something. And then when the market's up, after it rallied for a couple weeks, they're like, I don't know why you guys are hoping for a pivot. We're not pivoting anytime soon. It's like, it's nuts. And I honestly feel like half of the people trading that are just algorithms, really. Schiff, we are in the eye of the inflation hurricane. Yeah, and I still think inflation is just going to hover around where it's at right now. Maybe go a little higher, maybe go a little lower, but nothing significant until we get like 1 more to 2 more full percentages in. 2 more percentage in on the Fed funds, and then we'll start seeing inflation really coming down. Because at that point, the stock market's coming down. And when the stock market's coming down, that wealth effect is really going to go away. And people are just going to stop spending. And I gauge this myself with older people I know who have like 401ks and all that. And they get, stock purchases through their employment. They're still spending. They talk about their stocks. They're like, yeah, it's really down. It's not where it was. And they'll say stuff like that, but they're not like worried. It's when they're like, oh my God, is it ever gonna go back up? That's when they start saying stuff like that, like start panicking, and they just stop spending, and they're like, oh, I need to save money. That's when you know inflation is gonna start finally coming down. Although you already see it, right? Like inventories at stores are really piling up. You're starting to see some sales and some things. I like to see it like Home Depot and Lowe's. Like their inventory is pretty flush there, and then you just don't see as many people shopping. Obviously, because of the housing market. Wait, this doesn't make sense. Let's read this article. The housing boom is already over. Get ready for even higher prices. By Tyler Durden. Authored by Ryan McMacken, the Mises Institute. Mises. As mortgage rates have risen this year, the demand for home purchases has fallen. That has spelled trouble for the home construction business. Home builder confidence dropped for the 10th straight month. In October, the decline in builder sentiment reflects what economist Ian Shepardson describes as housing in freefall. So far, most of the hit is in sales volumes, but prices are now falling too and have a long way to go. The University of Michigan's index of buying conditions for homes has fallen to the lowest level since 1982. That's pretty sweet. Meanwhile, as of this week, mortgage demand for home purchases is down 41% from a year ago and close to a 7-year low. Naturally, this has been a sizable drag on the sale of newly constructed homes. According to the Consensus Bureau, new single-family houses sold in the U.S. in September were down by 17% year over year. They were also down by 10.9% from the previous month. Overall sales of new homes are down 42% from the peak in August of 2020. 42% is it's good. Nor does it look like the construction of multifamily housing is likely to make up for the decline in single family. Although it might stand to reason that a decline in demand for purchase housing could lead to more building of rental housing. That doesn't appear to be the case. According to Housing Wire, the historic multifamily housing construction boom is already fading. This is partly due to the fact that rising interest rates are not limited to mortgages for home buyers, and those same interest rates pushing would-be home buyers to the sidelines are also hurting multifamily developers. It's getting more expensive to borrow money up and down the food chain in housing, and that's slowing down new construction of both for purchase and for purchase housing. For anyone concerned about availability and affordability of housing, this is bad news. The U.S. is currently in the midst of housing shortage in the sense that builders aren't building enough to keep up with population growth. And now it appears that the short-lived boom in construction that launched in recent years will soon be over. Alright, so is his argument the population boom? Or growth? See, I don't think that I don't think it's gonna be a big deal. And I know some of you are thinking, why? Well, I don't think it. Yeah, a lot of people, but it's we would have saw more by now. I mean, maybe it's a slow thing. But I think the single family thing is at some point boomers are downgrading, right? Right? Maybe they'll move into their RVs. I don't know, but because the cost of maintenance and taxes, all that only goes up. I guess some millennials can move back home and then they could pay rent. But I don't think there's such a population boom. Well, a lot of people are still coming to the U.S. I think those people are all going to head back once things get really dicey here. Or maybe not. They can handle it, but they're not going to find work because they send all the money out of the U.S., down south. It is something to think about, right? Because to build a new home costs a fortune. And it's cheaper to just buy an existing older home. Plus, they're built stronger and better. Especially brick or concrete. What happened to Elon's micro home? It launched. You could buy a $10,000 Tesla house or some shit. It's like a shoebox. Maybe a lot of millennials will just end up living like that, right? Buying those tiny homes. Which is, I'm not gonna. If you do that, maybe it's a smart move temporarily. For this bear market for the next couple of years, just to live in a small I've thought about just buy a small parcel of land. Land prices are just dropping massively with housing, right? And if there's a well and some stuff electricity hookup, it might be something to consider. Just to live in a little 800 square foot home, log cabin. Honestly, I'd be happy, but I do need a lot of space. I have a lot of shit. And I love having an at-home gym. That is a life-changing game changer. The problem is you do miss being around like just people, and you got to get out. And going to the gym is kind of fun sometimes. Like you get to talk to people, you know what I mean? You get to see some ass, you know. Yeah, let's read a little more of this. For anyone concerned about the availability and affordability of housing, this is bad news. The U.S. is currently in the midst of housing shortage in the sense that builders aren't building enough. Okay, I read that. The combination of the boom-bust cycle coupled with mounting government regulations driving up the cost of construction, that is probably true, will further drive up the cost of living for ordinary Americans. Yes. New housing construction has always been sensitive to business cycles. Over the past 60 years, it's not hard to find annual swings on construction growth ranging from negative 20% to positive 20%. Moreover, the negative swing on housing construction in the years surrounding the 2008 financial crisis were especially severe. Construction began to head downward in 2006 with a drop-off 12%. This was followed by 3 years of even bigger declines, culminating in a 38% drop in 2009. New housing construction did not return to the post-1990 average again until 2020. Wow. So 2020 was the equivalent of the 90s. 1990 had a huge housing. That's when the cookie cutter development started. And that's when a lot of people had a lot of kids. In the 90s, everyone had 3 to 4 kids. And that's what I'm trying to say. People aren't having kids. Matter of fact, Schumer came out. He says he dropped a truth bomb that a certain demographic, whites, they're just not having kids anymore. And honestly, I think that has a lot to do with the economy. And I think it's everyone. It's not just them. It's all across the world at this, the developed world, even in South America. It's just the birth replacement rate's just dropping everywhere. It could be a lot of things. I think it's just a lot of things. It's not just culture and brainwashing. It's microplastics. It's the chemicals. Everything that comes in a box or plastic, cans probably. There's a plastic liner in the cans. It's just chemicals leaking into your food. It's the way they do industrial farming and livestock. Livestock's pumped full of hormones and estrogen, so they get fatter and they carry more fat. And that you eat that, and then you're just eating estrogen-filled meat. That's why you have to eat organic, grass-fed, free range. It's even in the eggs. You got to get sun. You have to get more sun. You can't sit inside of a house or office building. You have to move. You have to work out. I am the only person in this giant park at night when the sun's, down. Honestly, I don't even see people running at the park anymore. They did a little bit during the lockdowns because people had nothing better to do. But I'm the only one who jogs. I swear. Maybe during the day there's a few more guys, but what are people doing? You have. What else? It's a lot of things, guys. And it's mainly probably diet. And staying away from seed oils, soy. You guys know. You should, I believe it's called HealthBot on Twitter. Follow that. It'll change your... If you follow it, eventually you'll start doing it. It's really, you have to start slowly, and then it's it's a lifestyle, and it sucks because you have to cook. And I know you got to do dishes then, and it's time consuming. But, maybe meal prep, or it just becomes a lifestyle. And I'm not perfect. I still eat a lot of pizza. Like, I just don't care. But I work out so much, it doesn't matter for me. But I also do other things, right? Like, I'll take like herbal pills that'll boost your testosterone. I'll drink lemon with organic honey. That boosts it. There's types of, what is it called? Diasporic acid, all kinds of stuff where you can naturally boost your test levels. Because I believe in the West it's fallen like 40%, maybe 60%. A lot of males today are like at the level of like 80-year-old men, so explains a lot, right? So that's just what happens. It's the mouse utopia theory thing. And living in an urban environment will probably do it too. Probably getting hit with like I don't know if that'll get hit by the algos, but I'm pretty sure electromagnetic frequencies aren't helping either. There's all kinds of things, right? And probably being closer to nature and eating as healthy as humanly possible, or as the way they used to like 100 years ago, will set you straight, and you'll be smarter. You need to eat a lot of fat, actually. Amino acids. You could get it from fish pills. I've always taken those since I was a kid. Which is really good for your mind. Omega-3 fatty acids, basically. You get it from fish, beef, steak. And that type of fat is good for you. The fat from, by the way, like plants and all that shit, like, yeah, it's good for you in moderation. I still eat that. It boosts testosterone. Like Brussels sprouts, stuff like that. By the way, you have to steam it. Buy a steamer. That's it. It keeps all the nutrients in. Everything you microwave, nutrients will be destroyed. All right, I'm gonna digress from that. You guys are gonna get a little bit of everything if you stick around long enough. This is probably a 2-hour video, isn't it? Probably. No one stuck around this long, did they? Let me know if you stuck around this long in the comment section. I appreciate it. Twitter on lockout after mass resignation exodus. Operation at risk. That sucks. I noticed today that Twitter sucked. Like, there wasn't much going on. It might be just because of the sentiment of people, after all this FTX stuff. And people are just like, I'm logging out. I'm taking a break. And, we're in the bear market, and we're probably, once BTC and ETH could fall another like 40% at least, 30 even, we could start the depression phase, which is just long and grueling and grinding, and slowly crawling out of it in the next year or two. And again, if you position yourself at the bottoms of the bear market when everyone left and everyone thinks it's over, and it seems like the sky's falling, and then you just hold on, right? You hold on, even for 4 years if you have to. It could change your life. But it's easier said than done, and I know it is. Because I've gone through this damn cycle quite a few times now. And I somehow managed to not sell everything at the all-time high. Even though I know it's there. It's unfucking believable. Alright, so Biden admin warns of bankruptcy surge as it asks Supreme Court to resume student debt forgiveness. Now, this is a touchy subject. Is it inflationary? Yeah, it is. But, guys, I mean, listen, it was kind of a scam. It was. And yeah, I know they don't deserve the forgiveness, but at the same time, it's like, do you want an entire generation just shackled to the point where they will never have a home or a family and they'll never reproduce? Because that's really bad for the economy and your future. And everyone thinks of like purple-haired like I don't know, gender studies or some shit. And, maybe some of them will come out of it eventually. They'll grow up. Many probably won't. I don't know. But either way, I don't think anyone's going to pay it anyways. I think enough people, after they halted it for like 2 years, I don't think most people are going to be paying it. They're just all going to default. And why is that? Because they probably can't pay it. Because they haven't been paying it for 2 years. And then, now they're out of money because inflation went up. And now they can't even make ends meet. The last thing that they're worried about is paying their student loans, I believe. And then, it hits their credit, and then they can't get a car and a home, and it's just like a cascading poverty effect. And then if anything, wipe off the interest that keeps accruing and then compounding. You're a serf. It's actually worse than a serf. Serfs, like, I believe they only paid like 15 or 17% of what they made, and they got free housing during the Middle Ages. They had it better than a current millennial. So, your barista sitting on like 6-figure debt, or your waitress. I mean, what's the point of making them repay it? And where does that money even go? To banks? To not good people. So the people complaining about this, a lot, like, I get it. Some people are screaming because they did pay it off. Yeah, well, you should have thought a little ahead. I paid it off, and the way I did it was I went to war. So you don't see me bitching about it, and I know the feeling of all of that hanging over your head. It's unnecessary. School wasn't worth it. It was, and I'm not complaining because I knew what I was getting into before it, although I was hoping the degree would be worth something, shit, or degrees. The wealth of China's richest plunges 39%. That's a lot. I believe, so their economy is opening back up. China's economy opening back up. Is that going to, shit, that could actually be really deflationary. I haven't heard anyone talk. Well, no. It's deflationary in the aspect of cheap trinkets and stuff, but we already have enough of that. The stores are all on back order. So how's their economy going to start back up? And their exports are going to be falling despite. I mean, they could sell it to third world and emerging markets, their stuff, and the Silk Road, right? And is it deflationary? Not really, because their oil demand's going to go up. And then the price of oil is going to go up. And because the U.S., I've already talked about this, is not very energy independent like it used to be just a few years ago. A lot of that inflation is energy. So if China goes back online, oil goes back up, especially because Saudis are very, the BRICS, the new oil cartel emerging, is it's kind of undercutting the U.S., right? And then they'll sell oil at a higher premium to the U.S. So it's kind of inflationary for the U.S. and Europe, the West. By the way, Russia's making bank off oil because it's still making it to Europe. It just has to go through other means, other countries, like maybe Turkey, and then it reaches Europe with 30% premium or something. Dwindling U.S. cattle heard implies supermarket beef prices may rise even more. Yeah. You will eat the bugs and be happy. I think that is it, guys. Alright. Well, smash some likes. Please leave something, anything in the comments section. And, you know, join the private group. It's like $20 a month. I'll do a discount, like $50 one-time fee. And then $20 a month. And $20 a month is a cup of coffee in some places now, so... Alright guys, leave in the comments section if you want me to talk about something. I'll start making more videos for the winter. It's just, the last few weeks I've had real bad luck. Like I got hurt like 4 times. I thought the universe was trying to kill me. I'm not even joking. Like I fell off of a cliff. So... hang in there. We're gonna make it. We're all gonna make it. It's just,
and I'll tell you why. I use my finger
these are the
4
cycles,
seconds. I
right?
click erase.
Till next time.
Amazing. My name is Jesse.